I want to bring you back to our conversation now about the markets. Our next guest says that investors seem to be running scared. They've taken $28 billion out of stocks since the month of May, and he doesn't really blame them. He might as well. Joe Saluzzi is very bearish on the economy. He does expect a double dip. He's head of equity trading at Themis Trading. He's with me here live in studio. You say we're one headline away from S&P 900.
Well, absolutely. The problem that we've seen over last year also, but is that the economy and the stock market have two divergent paths. So I can give you 1,000 reasons why the economy will head into a double dip. All of the problems that we had last year haven't been corrected. You know, stimulus barely addressed some of these things, and stimulus is starting to run out. So in addition to all of the problems from last year, now we've got obviously all the European issues. We've got pension funds that need to be bailed out. Just yesterday there was a report in New Jersey, $174 billion deficit in their pension fund. I mean, those are unsustainable numbers. But here's the problem. The government knows this, the Fed knows this, and they are just one step away from another stimulus package, which the stock market loves. So I anticipate that to be coming soon, most likely in some sort of home buyer credit, and that'll continue to support the market while they kick the can down the road some more.
Well, the political prospects of another round of stimulus seem a little bit questionable at the moment, but you're basically saying that now deficits do matter and they're going to continue to matter in a real way. So you're pretty much saying it's really tough to trade equities right now. Don't even try?
Well, the problem with equities is it's supported by volumes which aren't necessarily, you know, real investors. There's lots of these high-frequency guys who come in and out throughout the day who will tend to support stocks. I mean, look at Citibank. It's a perfect example of a stock that really doesn't trade on fundamentals anymore. It's a billion shares of nothing. But the bottom line with the stock market, we've seen it all last year. Guys like me who would come in here being extremely bearish would have gotten their face ripped off because of the market continuing to go higher, just because of this type of stimulus back there. Eventually it has to run out. The U.S. is on course for a 90% deficit of GDP by the end of the decade. These are huge numbers, right? So eventually, once they get through the wreckage of Europe and they start picking through all of that, they're going to set their sights on the U.S. Right now we're the flight to safety, but that won't last long.
So tell me, you're on a trading desk all day. Tell me what volume is like right now. Tell me what sentiment is like when you're seeing more people who are active in equities taking short positions.
No, I think there's still value investors out there. If I was a long-term holder, you know, take some of these fundamental guys, you know, Whitney Tilson, he's looking at BP right now. I don't know if I would agree with that, but those are long-term guys who want to buy stocks for 5 years. There's nothing wrong. We do see that. We see value investors looking for some certain values, but for traders, it's a very difficult market, whether you're long or short, because of the news announcements that just come flying out. If the Fed decides,
so do you buy gold and hide under a rock?
Well, yeah, you build a bunker, right? You put some canned goods in there.
Thank you very much, Joe Saluzzi. We got to leave it on a dark note there, but we will track your predictions.